The government's debt and liability exposures are estimated to hit 1.26 trillion ringgit by end 2020. According to Deputy Finance Minister Datuk Abdul Rahim Bakri, the amount took into account this year's overall deficit, which includes funding for the government's various stimulus packages and economic recovery plans. In Dewan Rakyat today, Abdul Rahim said that the federal government's debt stood at 823.8 billion ringgit, while its debt position was 53.6% of GDP. He explained that the government bore the liability and exposure to financial commitments, including guarantees to implement infrastructure projects, the 1MDB debt, as well as other financial liabilities comprising public-private partnership projects, private financing initiatives, and Pembinaan BLT. The government is expecting fiscal deficit to be 5.8 to 6% to the GDP this year, compared with the previous estimate of 3.2%. Asian Govt stock's stunning rally is seen extending further as the burst in demand amid the COVID-19 pandemic is showing no signs of moderating. Citigroup analyst Megat Faiz said in a note that shares in Malaysia's top Govt and Kosan can climb by about 75% over the next 12 months as sales and profits for the sector continue to grow. As of today though, Govt manufacturers took a breather possibly on profit-taking activities following news that Russia had become the first country to grant regulatory approval to a COVID-19 vaccine dubbed Sputnik 5. Top Govt's share price fell by 2 ringgit and 80 sen or 10.3% to settle at 24 ringgit and 50 sen, while Kosan dipped 2 ringgit and 50 sen or 14.2% to close at 15 ringgit and 10 sen. Meanwhile, Hartalega traded 2 ringgit and 18 sen or 11.9% lower at 16 ringgit and 12 sen, while Supermax ended the day 2 ringgit and 78 sen or 12.8% lower at 18 ringgit and 88 sen. The smaller players were also affected, with Comfort Gloves closing 89 sen or 18.1% lower at 4 ringgit and 3 sen, and Care Plus slumping 82 sen or 19.1% to 3 ringgit and 47 sen. Mr. DIY Group's initial public offering plan is back on track after it was placed on the back burner in March due to the COVID-19 outbreak. According to a Bloomberg report quoting sources, Mr. DIY aims to resume marketing efforts next month. The company reportedly plans to raise about $500 million or about 2.1 billion ringgit in a share sale, which could begin as early as October. The IPO, backed by PE firm Creator, would be the biggest in Malaysia since Lotte Chemical Titan's listing in 2017, where it raised $849 million or about 3.56 billion ringgit. Mr. DIY, the country's biggest home improvement retailer, currently operates more than 622 outlets nationwide and sells over 14,000 types of products ranging from furniture to hardware and toys. WRP Asia Pacific said it has received offers to buy 10 double former Govt production lines located at Advanced Healthcare Products premises in Senawang Negeri Sembilan. Special Counsel Matthew Thomas Phillips said in a statement that the production lines were assets acquired from Sama-Sama Engineering Machines between 2010 and 2012 and were installed at AHP's facility under WRP's previous management. Philip explained that the monetization of these assets would enable WRP to expedite settlements with its creditors starting July 2021. In June, WRP had been raided by the MACC as part of an investigation into the alleged misappropriation of funds by its ex-CEO Datuk Lee Son Hong. WRP proceeded to sue Lee on grounds that he had allegedly mismanaged the company and refused to account to its board on the state of affairs. Lee was also accused of conspiring to wind up the company. Singapore-based firm Tayrona Capital is acquiring a 99% stake in real estate developer Hatton Land's Harbour City Mixed Development in Malacca in a deal worth $323 million or about 1.36 billion ringgit. Harbour City comprises the thematic Harbour City Mall, Malacca's largest sky water theme park and a luxury hotel. The theme development will be the latest addition to Tayrona Capital Sagana Hotels and Resorts global network of 32 hotels and resorts. Hattonland said in a statement that the agreement with Tayrona Capital will firstly see the latter invest $23 million or about 96.54 million ringgit in Hattonland's Unit Gold Mart, which is the developer of Harbour City. Tayrona Capital will also be injecting $240 million or about 1 billion ringgit to improve and complete the development and marketing of Harbour City. Hattonland will also transfer various intellectual property such as project design and concept, domain names, internet site, and marketing materials to Tayrona Capital for $60 million or about 251.85 million ringgit. Hattonland says it plans to use the proceeds of $60 million to strengthen its balance sheet and for future business expansion.